Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway here at the Verified Investing Studios. We are going to get into the deep chart action today. As always, folks, I want to bring you key information that you're not going to get anywhere else. All right, so let's get right to it right here. Let's just do a little bit of see if Tim can catch this. There we go. All right, right over here, guys. You guys know I like to have a little fun. I got to have a little fun with the markets and with what I do. So that's what we try to do here with the game plan theme, and hopefully you guys don't mind too much. All right, so number one, just a couple headlines out there today. Tesla jumps on news that the company plans to offer a 1-month free trial of its full self-driving car systems. The key resistance levels here today, and this is more for day trading, 183 and 188. So again, those are the levels. I isolated them down on the charts. I'll show you in just a few minutes how I got those levels, but those will be levels that I'll be watching in my live trading room today with my other traders as we look to profit up on the ups and downs in the market. Next up, Krispy Kreme. I'm sure we all enjoy a good Krispy Kreme donut here and there. Jumps 21% after their donuts will be sold at McDonald's. So again, that's very positive news. Gets their brand out there and in many, many stores across the world. Reddit jumps 10% on low shares, allowing for short squeezes. Now, this is something I want to talk about. When you get an IPO, what happens is when the company goes public, and Reddit just went public late last week, there are only like literally 1 million or a couple million shares that are basically sold to the public. The rest are locked up for insiders, and the insiders have those, and they have a 6-month, usually I should say, a 6-month lockup before they can start selling. And so what happens is when you have such a low float of shares, the price can be very, very volatile. In general, in bull market atmospheres like we are in right now in the markets, you get big moves to the upside. So for instance, we see Reddit up another 10% today. I think it was up like 20% yesterday. But again, that happens because there's not a lot of supply and it's conducive to seeing short squeezes. We saw this on ARM Holdings just a few months ago on that when it's a semiconductor stock and we saw the big pops there. Now the lockup has ended for that and you're starting to see more shares being unloaded to the public. So again, just be aware that you have to be careful here. This is not a fundamental reason why the stock is going up. It's usually what we call a short squeeze or due to lack of supply. Lastly, Meta CEO Mark Zuckerberg selling another $39 million in shares. He's been unloading and unloading and unloading. We've seen Benioff unloading, Bezos unloading. So this is not stopping, guys. And I want to be clear on this. I try to bring you stuff that you're not going to hear in the mainstream media. But again, we are seeing some of the biggest insiders unload hundreds of millions, if not billions of dollars in shares. Bezos is one of those that has done billions of dollars. But again, that to me is something I don't like to see. Now, it's not something that means like today the markets are going to drop or next week or next month. But in other words, if you're a CEO and you're holding a lot of shares, there's a couple reasons to unload. Number one, you say, hey, I want to buy a new yacht. Okay, so you sell $10 million, $50 million there. But when you keep on doing it, consistently doing hundreds of millions, if not billions, it's telling you that you ultimately don't think that the stock is undervalued anymore. You think that it's gotten too expensive. And that's what I would just point out here when you see insiders unloading. Now listen, some insiders, they'll say, oh, well, it was a predetermined sell. Well, of course, they're not going to be like, they don't want the public to be like, oh yeah, look at him dump. Instead, it says predetermined, like automatic sale. But again, they have control over that, right? They're the ones that set these levels, and they could set it a month ago and just be like, okay, next month, automatic sell. It again makes it look less fishy, but it's still happening. It's all about dollars and cents. Let's remember that. All right, before we get into individual charts, we're going to find out who wins the 1 year free of premium for Trading View, guys. And again, this is what the wheel landed on yesterday. So let's do it right now, and then we'll do another one later. Remember, we'll spin the wheel later and find out. In addition, stay till the end, and I'll give you that question that you have to answer underneath this video, not in the chat box, but underneath this video. Ah, there we go. All right, Jeremiah Anderson, 1159. There's a free year to TradingView, about a $600 value for that premium subscription right there. Congratulations to Jeremiah. And also, folks, congratulations and thank you to TradingView for donating these to us. I think that is awesome. And I truly appreciate them. And I appreciate each and every one of you guys for spending your time each and every morning with me. Okay. So let's talk some charts, guys. So number one, what do we see here? Well, in the overnight, the futures got pushed up. This is the NASDAQ 100. We could see the move up, and then we've started to come back in a little bit here. Now, the reason we have seen a little bit of selling in the NASDAQ 100 pre-market going into the stock market open is because we got durable goods orders and business investment numbers. Now, again, durable goods orders came out better than expected. In business investment also came out better than expected. Now, you might say, well, why is the market going down on that? Because anything that's a positive for the economy means the Fed may be less likely to cut 3 times this year, which is what Jerome Powell said they would do last week. So again, even though Jerome Powell is saying, hey, we're going to still cut 3 times, he is still data dependent. I mean, if all of a sudden we see inflation ripping higher over the next couple months and the economy getting hotter and hotter, he's not going to be able to cut because it'll just create even more inflation, and that's an issue. Now, if we flip back to the daily chart, we can see again we are still below this wedge pattern right here. We broke down, we confirmed, we've retraced, and again, yesterday a little bit of a down day. Today, as of now, we're slightly higher. Yesterday, by the way, on the S&P was the lightest trading day of volume basically in the last year. Now, why is it so light? Well, number one, we don't have a lot of economic news. Even though the durable goods orders came out, it's not inflation news or employment data. Those are the 2 key cruxes that the market's going to pay the most attention to, and we're kind of in this lull between earnings seasons, right? So again, there's not really any big tech reports anymore. You have a few earnings this week. We had UPS that came out up a few percentage points. But for the most part, until we get into about the mid-month of April, the earnings seasons are over. So a lot of the catalysts for ups and downs are not there, and the stock market is closed on Friday. So again, you don't have the kicker of that when the PCE data is released on Friday morning. And again, very weird to hear the PCE data being released on Friday morning when the stock market's closed, but that's what they're deciding to do. Looking at the S&P 500, same thing. We've had a little bit of a rollover here, but keep in mind, this is where we closed yesterday, right? So we closed here yesterday, so we're still net positive, right? You can see again, if we draw that line up there, we are still net positive on the S&P, and this is coming off of a day yesterday that we were down overall. All right, now again, if we looked yesterday, we could see a lot of the mega cap tech stocks were under pressure except for Nvidia. Nvidia, again, is approaching that key major technical high. We'll see if it's able to break above it on a daily closing basis and negate that reversal engulfing candle. All right, now I want to spend some time looking at some other charts here. A lot of times we focus on the big players, the Nvidias and so forth, but here, today we're going to look at Coinbase. Coinbase is up pre-market. Again, Bitcoin is still holding on to that big gain from yesterday, hasn't really given it back at this point. Granted, it hasn't gone higher either, still around 70 to 71,000. But nonetheless, we have Coinbase moving up here. I want to show you a couple levels here on the charts that I'm following. So, and there's no lines on this chart. I want to show you something. So what we could do here is we can draw a trend line in here, okay, and we can extend it out here. So you have this kind of little bit of a channel development going on. What this tells me is that if we get right up here, you're going to be into resistance. It looks like it's around maybe 285 to 290. It's hard to know exactly what price point that is up there, but nonetheless, that looks like a little bit of resistance. Now, on the bigger time frame, if we erase that, what if we actually put a trend line here? Let's do another channel. And if we draw this up here, we can see there's also something of interest right there. And again, you can see this line from all the way back here, how price kept on hammering all along this level. Okay, we broke down, we came up, we hit it, we retraced, and again, that gives us a confluence. Remember the other line I just had? That's approximately the same spot as that previous level would be. So again, I'm going to do my best to find out what level that is here, guys. But it looks like, yep, actually it looks like it's around 295. So again, around 295-ish, give or take. That will be a level, and maybe right at the 300 even number, where we start to see a big pullback in Coinbase. Now, Coinbase pre-market, I saw it as high as I think around 285 or so, give or take. So it's only about $10 away from that level. But again, that to me looks like a very interesting opportunity potentially for a pullback. And what we can see here again is that if you take this high here, okay, this high, and we connect it to this high, and we draw that trend line through, notice how it's pulling back every time it gets there. So for my job as a technician of the charts, what I'm looking for is things that happen over and over again. The idea being is that if it happens over and over again, I have a good chance, a higher probability than not, of it happening again. So if it gets up here, I'm looking for a pullback like that as well. And again, that's the way, in my opinion, that you want to trade. You don't trade on hopes and dreams. You trade at least with some sort of major technical backing that at least put the odds in your favor. All right, next chart I want to go over here. Let's look at this one. This is Netflix. Now, Netflix, again, has just been grinding slowly higher. Now, if you look at this chart since the earnings, doesn't it look very similar to the S&P 500? And by that, I mean you got this wedge pattern. The only difference is this one has not broken down yet. So again, we've seen the S&P, well, granted, the S&P hasn't confirmed below it yet either, but it is below at least. So that's one of the things we're going to watch for is, do we get a close below this little wedge pattern? And if we do we ultimately confirm it? If you confirm it, I'm a big believer that gaps have to be filled eventually. You don't know when, but when you have gaps like this huge gap between the price here and where the stock opened the next day, to me, that is something that likely will be filled in the not too distant future, next 6 to 12 months. That's a drop all the way down from $627 all the way back to just below 500. Now, a couple other things to look at on the chart in terms of levels. So let's go and just draw some lines here. So we are looking at a secondary level of support right here. And interestingly enough, it looks almost like that's a parallel. In fact, let me do a parallel. And by the way, I really didn't analyze these much pre-market. I just kind of glanced at them. So I just want to show you guys how, again, this is what I do. I literally take parallels, I draw them up, and I say, holy cow, look at that. And literally sometimes I say, holy cow, look at that. But my point is, again, is that look at how you get this low to this low, and then look at how price is, this is a perfectly parallel line. I'm using the parallel tool in TradingView, how you just continue to hammer on there. And again, the question is, so if we fall, you'll have some support here at around 580, but then eventually upsloping channels break to the downside. The kicker is you don't really know when. You can utilize the hit method, which is how many times it hits. Basically a trend line that's upsloping. Let's do a quick general trend analysis. So usually first, second, and third hits, so 1, 2, 3, it's somewhat unusual to break. By the fourth and fifth time, probabilities start to increase, then eventually you get a breakdown. So if I'm looking at this, we only have one hit and we only have two hits. So what this tells me is that if it comes down to this level, you'll probably get a bounce like that. Then maybe we'll break to the downside on the fourth or the fifth hit. All right. And again, the thought process on this, imagine if this is a door, right? This line is a door. It's a little lopsided, right? But here we have a door. Here's your handle, right? You know, your opening, closing. So the idea is when you hammer on that door, let's imagine you're running against that door and ramming it down. The first time you hit it, probably not going to break it down unless you're Hulk Hogan or someone like that. Shout out to Hulk Hogan. He lives right in this area in Clearwater. But nonetheless, you hit it once, you hit it twice, you ram into it a third time. Finally, by the fourth or fifth time, if you really use your force, that door is going to give way, assuming it's a normal door, right? Not a metal door or something like that. So the thought process there is the same that you use in the charts. And again, we'll see if that occurs here on this technical setup on Netflix. But suffice it to say that the short level, it would be up here, right? So right up here, this is a short. This would be a short-term bounce level, but eventually you expect a drawdown in price. All right, let's go to a couple other charts here. Here we have a chart of Caterpillar. Now, Caterpillar popped on my radar yesterday because on Friday, we got what's called a reversal candle. Now, remember the difference here. Nvidia had a reversal engulfing candle. That is more powerful, right? So you have technical signals in the charts that have varying degrees of power. A reversal engulfing candle is more powerful because not only does it reverse the prior move, but it engulfs the entire candle from the high to the low. So if we bring up Nvidia real quick, let's just quickly go over that. I think that's worth seeing here. So again, if we look at this, right, and I'm zooming all the way in, if we look at this candle, it opened up here and it closed here. It engulfed the entire previous candle. That's a reversal engulfing candle. If we go to the Caterpillar chart, right, if we move back to Caterpillar here, all right, if we look at this did not, right, it didn't open above the high of the previous day and it didn't close below. Now, it reversed the previous day, which is a step in the right direction. It is bearish. It's not as bearish as a reversal engulfing candle. So again, just remember, in technical analysis, everything is tagged with probabilities, and probabilities are always adjusting based on what price is doing. And so you have to understand that different levels of different chart setups, different candlestick formations, they're always going to have varying degrees of separation in terms of probabilities. Okay, but having said that, is Caterpillar overdone up here? And the answer is yes, it is. But the question is, well, where would a level be, right? So let's start drawing some trend lines on this, and you guys can see here. So number one, this is a huge support, right? I mean, look at how you low pivot to low pivot right there. So if ever we fall down to this line, that's going to be a huge buying opportunity, right? It would be technically the 1, 2, 3. It would be the fourth hit, but you'd still expect a bounce because it's so far away. But you'd have to be nimble about it, right? Now, again, a couple other levels here to watch. We have a flat point right here. That's definitely some support as well. And then you even have a little bit of an upswing. And again, I'm just doing this live, folks, with you guys. But look at how you have this level to this level, and then it goes right. So see how it broke above, and then that became support. This was resistance, resistance, breakout, retrace to the scene of the crime, and then up it goes. So the first thing you would do is say, okay, if we come back there, that's going to be technical support. The level is 319 to 320 on that level. But these would be your next key levels of support. Now on resistance, where do we look, right? Because if we look at this chart and we go to our monthly chart, we're basically in uncharted territory. And this is where it gets very, very tricky, right? The only thing I see here that might get my attention, and I'm going to erase all my other lines here to keep it as simple as possible. What if we just do a line from this low to that high? Now, you see, you're even above that. So that even takes that out. So really you don't have, aside from the reversal candle on the daily, which is bearish, it might spell a top, we don't really have a whole lot of other signals, at least that I'm seeing just off the cuff, that alerts me that that could be the case of a top aside from the reversal candle. All right, guys, quickly just looking at one insane chart here. Take a look at the chocolate cocoa price action here. This is one of the most insane charts, folks. Again, I'm surprised Hershey isn't even lower than it currently is. I'm looking at this as a chart. You do have a potential doji today, but it's still in flux. But again, incredible move. From the start of this year, this price of chocolate is up over 100%. That's hard on margins for any of these chocolate producers out there. All right, guys, quickly, let's go to the wheel here. Again, we're going to do a quick spin, and then we'll again see what it lands on. And don't forget, guys, at the end of this stream, I'll let you know what you have to comment on under today to get entered into it. And all you got to do, I keep it simple, guys, and fun. Let's do it. Oh, look at that. Range Trading Mastery with Paul Sampson's new course. All right, guys. So again, tomorrow we will do a drawing for that. We'll do our drawing for that. That is amazing, folks. Again, that's about a $300 course right there. And that is, again, he is amazing when it comes to crypto. In fact, on Friday, we'll have our new website launched, and you'll be able to actually access his service. And dude, this guy, better than me at crypto calls, in my opinion. He like literally said it's going back to 69 to 70. We went right there. He's been nailing shorts left and right. But again, I'll give you guys more information on that, and you'll find him on the website. But either way, someone tomorrow will be winning this Range Trading Mastery course. Pretty sick stuff there. I also want to just take a 30-second break because I Trust Capital sponsors this broadcast, allows me to do everything we do here. So take it away.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust. and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrustCapital.
All right, guys, we're back into it. Before we get going for that winner, all right, earlier, reach out to Lawton at Verified Investing, and he will get you all set up with your year of TradingView Premium. All right, so again, that's the way to do it. And don't forget, sponsors out there, if you're watching this and you want to participate, if you want to be a sponsor here at Verified Investing, just reach out as well to Lawton at Verified Investing. All right. Let's get into it here. Bitcoin yesterday, impressive move to the upside. We find ourselves back above the key level of 69,200. Now, for me, that level only matters now on a weekly close. So we're going to watch Sunday night. Come Sunday night, where do we close? Do we close above 69.2? Now, having said that, where are your levels here? Well, clearly, we have a couple pivot points to look at. So first thing to look at here is you can see that we have a double top. So double top will short-term be resistance. That's just below 74,000, around 73.7, I think, 73.8. That's going to be short-term resistance. All right, aside from that, what we're really trying to figure out here is after this down move, is that the end of it? All right, is that the pivot point that now is the catalyst for the next big move up? Now, again, I'm an optimist, and overall, I do believe that we'll see Bitcoin eventually continue higher, but I'm much more of a prove it to me versus a dreamer, right? And what I mean by that is you got to just really be aware what you're looking at. Now, in terms of chart action, I would continue to be net neutral to positive on price action. The one thing that would scare me on Bitcoin, that we were going to get a corrective move back to, let's say, 50,000 or so, is if this trend line breaks. So watch this like a hawk, right? Pivot low here, and you just connect it to this low, right? What happened is we pulled back here, and we hit it right there, and we shot right back up. Then look at how we pulled back again, and we hit this line. The fact that this line is getting tagged over and over again tells me it's major support. However, can support be broken? Yes, and that would be the one thing that if you're a bull here, you do not want to see. Aside from that, price action's pretty good. I'm impressed with the price action the last couple days, frankly, especially on Sunday. There was no volume there. Price went up pretty significantly. And you might say, well, there was no volume there. Why is that impressive? Well, because it actually held. The price action held the next day on Monday yesterday and actually moved even higher. A lot of times when you get a pop on light volume, the next day it comes right back in because there was really not a lot of buyers there. In this case, the buyers held strong, so you got to be giving credit there. So we know our support level here. We know our resistance level right up here. These are your 2 points to watch, right? Very clearly, those are your 2 pivot points to watch on Bitcoin. Next up, let's take a look. Here we have Solana. Solana's pushing up again. Now, again, on Solana, there's a couple points to watch, but I'll show you the most important support level. This would be a level where I would buy like crazy if it fell to this, assuming it wasn't on bad news or anything weird, right? But if we look at this, I love when 2 levels coexist together, right? It's basically, it's like you have one floor and then right there you have another floor. It's like double the protection. Doesn't mean it can't break, by the way, but overall, the probabilities are that it holds better. High pivot, draw that line across. You can see price got above, it chopped, and then ripped higher. And look at this lower trend line here, right through here, here, and here. And look at that zone right there. So essentially 125, 124, if price ever rolls over here and comes down here, that is going to be an epic level of support. Now, in terms of resistance, same thing. Your high pivot here, which is I think around 210, that is your resistance level on Solana. We'll keep an eye on that. Next up, we look at gold here, guys. And again, gold is pushing up. Gold continues to look good. Considering the dollar's been as strong as it has, you got to be impressed that gold just doesn't go down much. I mean, yeah, it reversed a couple days ago last week, but it never really went down. It just kind of going sideways. In fact, you could argue that you're just kind of doing this, which if we look at that, what type of pattern is that, folks? That's your little flag pattern, right? They're gonna put some bunch of stars in there and so on and so forth. So there's your bull flag continuing. We break above this and have daily closes up here. This should continue up. Now remember, I had that inverse head and shoulder pattern that dictated where my target, my longer term target was going to be. Flipping to the weekly chart here, just so I get a bigger view, we'd simply look at this, right? Okay, there's your inverse head and shoulders, right? Here's a shoulder, here's your head, and here's a shoulder, there's your breakout. And what you can do here, and this is a method that we've developed, is that you ultimately take this low, you shoot a line right up to the neckline. That distance should be replicated upon the breakout. And again, that takes us to about a $2,500, I think it was around a $2,540 target on gold. And if you look historically, that's around, it takes about 12 to 14 months to achieve it. Generally, if you map out historical breakouts on gold where it tops out, it's usually 12 to 14 months. So that's actually a pretty good move. That's almost a 25% move on the price of gold there in the next 12 months, let's say. I'm going to just skip to a couple others here, guys. Oil continues to creep up a little bit today, but remember, this was a big change. I had been pretty bullish to 84, 85. I still think we get there, but now the chart is actually looking really bearish because of my new discovery of this trend line here, right? So this longer term trend line going back to the COVID lows. Now, some people had pointed out that, oh, well, can you really trust the COVID lows because that was an anomaly? Doesn't matter. Anomalies are pivot lows. Pivot lows are pivot lows, right? Don't think that even though this is the weird low down here, but look at how the chart has reacted, right? How price broke and then it keeps on going back up and being held underneath that. That tells you, that proves to me that the trend line is valid. And I have to respect that, right? Now, again, if it just chopped right through, like let's say it came here and then went like this, okay, well then it tells you it's not valid, right? I mean, it just chops through way too much. But these are the things that you have to look for. Lastly, natural gas real quick, guys. Tomorrow we'll do silver. I'll try to do palladium and platinum, maybe even uranium tomorrow. But again, natural gas still stuck in this little wedge pattern. Amazing how it's coming to a head. Which way does it break? I have a small position on the long side. We'll see if it can break to the upside and get some momentum, but nonetheless should be interesting to watch. All right, guys. Back to center screen here. If we, let me grab the ball there. There we go. So the question today, guys, is what is your favorite technical analysis tactic? It could be moving averages. It could be VWAP. It could be, anything. It could be head and shoulders, whatever it is. Let me know. I love reading these responses to see what everyone likes in terms of their favorite. But don't forget, that's how you enter into this. And don't forget, you must be a follower on Verified Investing Twitter or YouTube. You have to follow one of the others. If you don't follow, you literally are disqualified day one, right? If you win, sorry, no can do. You don't get the prize. So make sure you do that, and also make sure to like this video. You guys have a great rest of your day. Thank you so much for tuning in, and thank you again for spending time with me every single day. Take care.